Welcome back to the channel. Today we're diving into one of the most talked about new projects on the blockchain scene, COAI Coin. Over the past few weeks, this token has captured attention with dramatic price swings, drawing both enthusiastic investors and cautious skeptics. The question everyone is asking is simple: is COAI Coin a legitimate long-term opportunity, or is it just another pump and dump scheme waiting to collapse? First, let's set the stage. COAI Coin launched earlier this year with the goal of merging decentralized finance with cutting-edge artificial intelligence tools. The team claims their platform will enable AI-driven predictive analytics for crypto trading and smart contract optimization. On paper, the idea sounds compelling, and that initial excitement helped the token gain quick traction. However, a compelling white paper is only the first step. Many projects look good on paper yet fail to execute. For COAI, we need to examine whether the technology is real and whether the developers are delivering measurable progress. Early investors often jump in based on hype, but sustainable growth depends on code commits, working products, and active development. Let's talk numbers. In its first 2 months, COAI's market capitalization surged from just a few $1 million to well over $300 million, with daily trading volume spiking into 8-figure territory. Those gains attracted traders seeking quick profits, which can create the very conditions for a classic pump cycle: rapid price appreciation followed by an equally rapid sell-off. A key red flag for any pump and dump is token distribution. Blockchain explorers reveal that roughly 20% of COAI's total supply is concentrated in just 5 wallets. While some of these belong to centralized exchanges, others appear to be private holdings. Such concentration can give a handful of players outsized influence, enabling coordinated price manipulation if they decide to sell simultaneously. On the other hand, COAI's development team has been relatively transparent compared to typical rug pull projects. They host weekly AMAs, maintain an active GitHub repository, and have published a clear roadmap through 2026. This level of communication suggests at least some commitment to long-term viability, which is not something you see in blatant pump and dump operations. Let's also consider market context. The broader crypto environment in late 2025 is characterized by renewed retail interest and speculative momentum. Bitcoin's recent rally and the buzz around AI-driven projects have created fertile ground for hype. COAI sits right at the intersection of those trends, making it naturally susceptible to speculative manias. Liquidity is another critical factor. COAI is currently listed on several mid-tier exchanges with decent order book depth. While that provides opportunities for traders, it also means that if a large holder exits, the sell pressure can cascade quickly. Thin liquidity during volatile periods often amplifies price swings for any pump and dump narrative. We should also evaluate the tokenomics. COAI employs a deflationary mechanism, burning a small percentage of tokens on every transaction. While this can create upward price pressure over time, it can also encourage rapid trading as participants attempt to front-run the perceived scarcity. That dynamic sometimes leads to short-term spikes rather than steady growth. Community sentiment offers another layer of insight. Social media chatter on platforms like X, formerly Twitter, and Telegram has exploded, with influencers promoting COAI as the next 100th AI coin. While enthusiasm is healthy, overly aggressive marketing and unrealistic profit promises are hallmarks of pump cycles. Balanced, evidence-based discussions are less common, which should give cautious investors pause. Regulatory considerations can't be ignored. Depending on jurisdiction, tokens marketed with strong profit expectations may attract scrutiny from securities regulators. Any hint of non-compliance if the token team is U.S. based or serving U.S. investors to trigger enforcement actions, which historically led to sudden market downturns. Despite these concerns, COAI's partnerships deserve mention. The project recently announced pilot collaborations with two mid-size analytics firms exploring AI-driven trading bots. If these partnerships yield tangible products, they could validate the technology and provide a real foundation for value beyond speculative trading. Investors should also keep an eye on the roadmap milestones slated for the next 6 months. Key deliverables include the launch of a decentralized AI marketplace and integration with major DeFi protocols. Meeting these targets on schedule would signal that the project is executing and not merely riding a hype wave. So, is COAI Coin a pump and dump? The answer isn't black and white. The coin exhibits some red flag price appreciation, concentrated holdings, aggressive marketing, yet also several positive indicators like transparent communication, ongoing development, and early partnerships. The truth likely lies in the middle. COAI may experience speculative pumps, but it isn't necessarily destined for a full-scale dump if the team delivers. In conclusion, whether you're a seasoned trader or a curious newcomer, approach COAI Coin with a balanced perspective. Conduct your own due diligence, diversify your portfolio, and never invest more than you can afford to lose. The coming months will reveal whether this is merely another short-lived crypto frenzy or a pioneering project that fuses AI and blockchain in a meaningful, lasting way.